Ladies and gentlemen, welcome to Only Trade to Win. I do not have any stock tips for you. I cannot tell you what to buy or what to sell, but what I'm going to show you is how you can think like a professional trader. Today is Thursday, December the 7th, 4:20 in the morning, New York time. As always, we begin with our watch list. In the last two videos, we did a monthly review of our indexes and stocks. One thing that we noticed that all of our indexes, including the Sickman Russell, are positive for this year. It was an excellent month of November. In column number 5, you can see the monthly performance. And as we discussed 2 days ago, our Sickman Russell was the strongest one on the month, finishing up 12%. And from our stocks, Tesla was the strongest one on the month, up 19%, closely followed by Nvidia. And the weakest one was Google, up only 6%. The reason I marked it in red is when I looked at the table, it would be really easy to spot the leader, the second one, and the third one. Maybe it's better to change the color because it seems like it's negative, so let's make it orange. So from now on, the ticker symbol would be in red for the lagger, and the return, if it's positive, we'll keep it in orange. Let's quickly go to column number 1 all the way to the bottom. If you see this note here to add, what I do is I put stocks that I'd like to add to my watch list, and when we get time, I'll do a review on it. Berkshire Hathaway is on the list because it would be really interesting to see how the stock will perform after Charlie Munger is gone. And today I added Adobe because I started using their products and they're phenomenal. We have a lot of ground to cover, and I'm going to go in alphabetical order. One of the things that I'm going to show you today is how to actually see the forest behind all the trees. And for that purpose, we're going to start looking at our charts. Pardon me, I do not like calling them charts. I like calling them pictures because charts are more permanent and there is nothing permanent in the markets. A bull market today can turn around and become a falling market tomorrow. So let's call this a picture. We're going to start by looking at the daily pictures. That would be our trees. And then we'll switch to a longer term picture and look at the weekly. And that would be our forest. So looking at the daily, we can see that Apple is approaching the purple line. I like to color code all my lines. So when I look at my pictures, I know exactly what's going on. I'm going to walk you through this one time, and then if you need to, you can rewind, but you will not see these numbers on the following charts. So looking at number 1, this is our all-time high. For Apple, it was at end of July when it closed at $196 a share. Then it proceeded to pull back 15%, and now the stock is sitting back near its all-time highs that it set in July. One thing that we noticed at a previous review is the angle of the rise for Apple. It was pretty much straight up from the beginning of the year until it made its all-time high. And now, from beginning of November, the rise is becoming even more steep. My interpretation is that FOMO is running the stock up and nobody wants to be left behind, especially when Apple is sitting only a few points away from its all-time high. Now, we got a little red bar here yesterday. Let's go take a look at what news came out, and I really don't see anything interesting. So what to think here? Well, if you think that some people bought the stock up here, and those people are probably the FOMOs, they bought it in 196, then the stock dropped down all the way down to 166 and rallied back. This is a little bit of selling, mostly by those who were holding it at a bad price, and that's one of the things that I'm going to reiterate over and over. You do not want to chase stocks. They always pull back. And if they don't pull back and they run away, like it was the case with Microsoft earlier this month, you just let it go. At some point, all of them stop running up and they pull back. And that pullback is the most valuable because it will tell you about what's going on. So let's go to our weekly chart and take a look at what's going on here. Looking at our weekly chart, it actually does not really give us any additional information except this trend started all the way back in March of 2020 when the stock was trading at $55 a share. Ran up, made a high at 182, sell off to the beginning of our year, and here we are at all-time highs. Every time you look at the stock, you want to go through the same process, so it becomes automatic. And even though I don't see anything that gives us more information. I am walking you through the thought process so you will start adopting things that work for you and help you make your decisions. So let's go on to our next one. Amazon. Green line is a previous 52-week high. It was set a few months ago in September. From there, we sold off to the beginning of November. And like all of them, it had a straight up month, making its 52-week high, and now the stock is consolidating at its upper range. When you see something like that, when the stock goes up and then it consolidates sideways, it is strong. When you see it consolidating and it cannot even go horizontal, it's going vertical, it means the stock is stronger, that the buyers are more aggressive and there are not many sellers. In case of Amazon, it ran up 20% and is just going horizontal. So by looking at this picture, you would say that Amazon is really strong. Now the blue line down below, in case of Amazon at $85, it's where the stock started the year. Now let's take our eye off the trees and look at the forest. And this is one thing that I didn't notice when I was doing my review a few days ago. The price level from which Amazon pulled back right here before November is exactly the same spot from which it pulled back in August of 2022. If we take a look at this spot, it came in 42%, but here it was only able to come in 19%, and it was able to close above the high or the closing price of the highest bar back in July of 2022. The way professional traders think about situation like this is that if the stock came to a price point, in this case $144, and it sold off 42% down all the way to 83, when we come back to this area, everyone is looking if there are orders sitting out there way back from this time, and if they will come in and push the price down again. In this case, you can see that they were able to push it down only 19% or half of the distance it traveled on the way down the time before. What it means is that these are the leftover orders, and there are huge traders that trade the markets and they just cannot fill all their orders. No matter how liquid the stock is, there are the people who are dynamic traders, the ones who can really drive the price up or down. Then the big order comes in and it starts this sell-off that pushes it down, and then it goes all the way down below $90. We run up into this price, and if you can see here, we have a wick, which means they blew off stops just to come back to this liquidity area and sell off again. Now, we were able to close above this level, which gives us a clue that that big order is filled. And that is why you want to zoom out and see how the forest looks behind all the trees. Because if we were just looking at the daily picture, there is no way that we could tell that this area came from August of last year. And since we're trading above that resistance level, we turn it into green and we call it a support. Now, it's not a major support, but what's important is that we traded above a major resistance area, which was a previous sell-off point back in 2022 that dropped the stock by more than 40%. Same thing happened this year. The stock came into the same area and dropped only half of the distance before. So our working assumption moving forward is that Amazon is strong, and we're looking for it to continue heading up to the purple line, its all-time highs. The next trading level would be 165, and after that is 186.